What started as a currency crisis in the city is having a direct bearing on the lives of households around the country. Their hopes for prosperity, for home ownership, now under threat. For Rebecca, higher interest rates are another obstacle to owning a home.
You've got all the house prices that have soared. You've then almost got a chance, but everything goes to auction. You've got a lot of products that came onto the market originally, but now they've all been taken off the market. There just seems to be so many hurdles. And for me personally, it just feels like a never-ending battle.
The Bank of England's chief economist signalling today that it will do what investors expect and lift the cost of borrowing.
It's hard not to draw the conclusion that all this will require a significant monetary policy response.
Which means raising interest rates, and those comments had an immediate impact. Expectations for the bank's benchmark interest rate, the one mortgages are based off, which only last month were expected to peak next year at 2.75%, rose to the highest level in decades, a 6.25% level for interest rates by next summer. And to add to the government's difficulties, after markets closed, the International Monetary Fund issued a rare statement, deploying language it typically uses to describe emerging economies. We are closely monitoring recent economic developments in the UK and are engaged with the authorities. We do not recommend large and untargeted fiscal packages at this juncture, as it is important that fiscal policy does not work at cross purposes to monetary policy. Furthermore, the nature of the UK measures will likely increase inequality. For Sir Charlie Bean, formerly of the Bank of England and Office for Budget Responsibility, there is a stark lesson. If it is to regain the market's trust, the government needs to show it's serious about the public finances, which could have uncomfortable consequences.
So if you want to get the share of government spending to GDP down, you have to be prepared, say, to move away from having a health service which is free at the point of delivery, to one funded by social insurance, like they do in Germany.
That's a massive shift.
Absolutely.
Contract, really, isn't
it? This is not a debate politicians want to have, opening that can of worms.
The Chancellor took advantage of a relatively calm day on markets, to meet financial investors and reassure them about his plan.
And what are the options? Well, he could do a U-turn, not going to happen. He could assume the Bank of England's going to do its worst, raise interest rates to crippling levels with whatever that implies for Middle England. He could introduce some of the toughest spending cuts we have ever seen in this country, going further than any previous government. None of those are palatable options, but then we've moved well beyond talking about a growth plan or the macroeconomy. We're now talking about credibility, and once you lose credibility, it is very difficult to get it back again.
Still think your plan is the right one for the country?
Yes, very much so.
If there is a plan, there was little clue from any of the ministers coming and going today. These are worrying times. Last Friday morning, Britain's economic prospects looked much the same as the rest of Europe. Today, this country faces a weaker currency, weaker growth, higher interest rates, and a crisis of confidence, which is still far from resolved. Ed Conway, Sky News.